Hi, this is James Altucher at TheStreet.com TV, and I'm here with Jim Cramer to discuss some pressing stock investment issues. So, Jim, I have to say I'm actually angry about something I saw in the media this weekend. Like, yet another pundit is saying share buybacks, when a company starts buying back their shares, is actually bad for the company because it shows they don't know what to do with their money. Like, what do you have to say about that?
Okay, there are a lot of companies that are generating a huge amount of cash that don't have a lot of capital expenditures. There are also a lot of companies that, frankly, look at the cash and say, how can we best deploy it for shareholders, all right? And perhaps the best way is to move earnings up, let people come out of the stock, and create a win for people. Those who think that there is nothing good about buybacks are people who, frankly, don't care if stocks go up or not.
Well, you bring up an interesting point in your last book, Mad Money, which is that you should look at not only companies that are announcing buybacks, but the ones that have already been buying back significant shares. So we set up this portfolio, and I've mentioned it before on one of these videos, but we set up this portfolio and we updated it yesterday, Mad Money Buybacks on Stockpickr.com. And in there, we look at all the companies that have actually been reducing their float due to buybacks.
Right. No, it's this look, the Stockpickr series is so important because there are numerous buybacks, but the only ones that matter are the ones that shrink. And what I loved about the portfolio is that it's wheat from chaff. There may be literally 500 buybacks out there, and maybe 50 are real, meaning that they are not just attempts to be able to sop up what they pay executives, but an actual attempt to make it so that there are fewer shares out there. You have to distinguish among the two because the ones that are just taking out of the executives that's just a form of executive compensation, and it is very different from a true buyback.
Well, let me ask you about one or two of them. Cigna, for instance, they've spent $1 billion buying back shares.
Cigna is a classic example of what I want in a buyback. They think that the market is wrong. Now, you could always argue that it's hubris for management to think that the market's wrong. But Cigna used to be a bad company, and it has become a better company. It recognizes that, but the street doesn't. I think that is a fulcrum buyback in that the company's making a statement. It used to be bad. Now we're good. Look at all the cash we generate. And if you don't care, the heck with you. We'll buy it. I like that kind of buyback.
Well, so they're buying back their shares. Their earnings are going up, revenues are going up. Why isn't this an LBO? Like, the company's already LBOing themselves.
No, what I would tell you is that this will be. I mean, when people are looking for LBO candidates, they should be looking for two things. Companies that generate so much cash that they're doing well. And I would also point out Lexmark is one of those, even though I don't like Lexmark at all, they're a candidate. Or companies that have so much mass scale that there's ways that the private equity guys can come in and fix things. And there's prospectively Gap stores and retrospectively Dollar General. So I look at Cigna, and Cigna's just saying, listen, we're taking it private. We're going to do a little bit each year. And don't be surprised when we ultimately disappear. They generate a lot of cash, Cigna.
Okay, great. Well, if you want to check out the rest of the stocks on this portfolio, go to Stockpickr.com.
Disney you did mention, right?
Disney's on this list as well.
Fabulous.
And they bought Pixar, but their shares outstanding didn't go up. They bought back all the shares.
I think that Disney is worth a focus, if only because we're about to go into upfront season, and you're going to see rates go up for Disney. So you're going to have a momentum component and a buyback component. That's a good stock.
I agree. I have two little daughters, and their Disney Channel shows are phenomenal now. They're the top shows on
franchise cable. Is a moneymaker. People always look at this company and they say, well, wait a second. They didn't do well on Tuesday night this year. Well, let me tell you how false that is. 300 Spartans made $80 million. And it didn't move Time Warner. Forget about what is an individual event or day part, and look at a broader franchise and see how much money it's making.
Great. Well, we have Disney, we have Cigna, we have actually Harley-Davidson, some other
It's a great
stocks.
list, and it works to be able to refute the bears. Yeah. I mean, Harley-Davidson has been a target of the bears for a long time. I looked at that and I said, well, the company believes.
They've raised dividends 13 years in a row. They bought back $1 billion worth of stock last year. And the summer season, everyone's going to start buying motorcycles again.
So right. It's so right.